Hey, welcome back. It's Jason Walter here. I have a ton of housing market information to share with you today, so let's go ahead and dive right into the video. Starting with the biggest news that was announced today, that pending home sales, which is a measure of signed contracts, rose last month following 2 consecutive months of declines. However, this increase was less than expected given tight inventory levels. Forecasters were expecting a 5% increase of pending home sales, but overall, pendings only rose by 1.9% from February to March this year. However, this is quite the turnaround after February's 10.6% decrease. The increase of pending home sales in March were more pronounced when you compare it to 1 year ago. This is because pendings jumped 23.3% from March 2020 to March 2021. However, as I mentioned in my previous videos, this large increase is mainly due to the fact that we had a pandemic-induced lockdown in March 2020. So I'd be very careful when you're comparing March sales this year to March last year. Going back to this report from the National Association of Realtors, pending home sales on a month-to-month basis increased in all but one region in the U.S. Both the West and the South increased by 2.9%. However, the Northeast surged by 6.1%, whereas the Midwest actually dropped by 3.7%. However, when compared to 1 year ago, all 4 regions in the US experienced an increase of pending home sales by double digits. In my opinion, if we had more houses available for sale, we would have had more pending home sales. This is because housing inventory is down about 28% compared to a year ago, and inventory is still near record low levels. Lawrence Yun, who's NAR's chief economist, stated the following: "The increase of pending sale transactions for the month of March is indicative of high housing demand. With mortgage rates still very close to record lows and a solid job recovery underway, demand will likely remain high." Speaking of mortgage interest rates, Freddie Mac actually announced today that the 30-year fixed-rate mortgage is currently averaging 2.98%. 1 year ago, rates averaged closer to 3.23%. Therefore, current mortgage rates are about 0.25% higher than the record lows that were set earlier this year. Freddie Mac's chief economist stated the following: "The good news is that with rates under 3%, refinancing continues to be attractive for many borrowers who financed before 2020. But for eager buyers, especially first-time home buyers, inventory continues to be extremely tight and competition for available homes to purchase remains high." And speaking of refinancing, I actually made a video about the pros and cons about refinancing. I'll leave a link below for that, or you can click on the video right up there. Regarding housing inventory, Lawrence Yun stated the following: "Low inventory has been a consistent problem." Yes, we all know that. But more inventory will show up as new home construction intensifies in the coming months, as well as from a steady wind down of the mortgage forbearance program. Although these moves won't immediately replenish low supply, they will be a step forward in the right direction. For the most part, I agree with him because housing construction has definitely been lagging behind, but it has been picking up, so let's discuss that. Permits pulled for new single-family houses in the US actually increased 4.6% in March from February, but were up almost 36% from 1 year ago. In addition, housing starts surged about 15% in March and were about 41% higher compared to a year ago. Keep this in mind though, because it normally takes builders approximately 4 to 6 months to build a house. I also believe we'll have an increase of housing inventory as more and more people exit their forbearance plan, but it's undetermined how much and when. Part of the reason for this is because homeowners had started their forbearance plans at different times, right? So thanks to the CARES Act, you could enter into a forbearance plan as of the end of March last year. In addition, and this is super important here because most people do not know this, but if you are a homeowner and you have a federally backed mortgage, you still can enter into a forbearance program. So check this out. This is from the Consumer Financial Protection Bureau, which is a government website. And it says here that if your loan is backed by FHA, USDA, or VA, the deadline for requesting an initial forbearance is currently June 30th, 2021. However, we'll have to see if that gets extended again, right? If your loan is backed by Fannie Mae or Freddie Mac, there isn't currently a deadline for requesting an initial forbearance. For those entering into a forbearance right now, homeowners can get up to a 12-month forbearance program. What I'm getting at regarding forbearance and how that's going to relate to our inventory is basically twofold. So number one, those in forbearance don't have to pay their mortgage payments, so why would they sell their houses while they're in forbearance? And number two, it's anyone's guess how many people will decide to sell their houses when they end their forbearance program. So far, only about 7.5% of those who have ended their forbearance program decide to refi or sell their houses based on the most recent stats that we have from the Mortgage Bankers Association. In addition, some of these folks who are in forbearance will eventually get foreclosed on, but keep in mind the foreclosure process can take over a year, and they're often sold on the courthouse steps to investors who have all cash. Also released today was NAR's weekly housing report. And as a housing data nerd like myself, I really like these weekly reports because normally there's a 3 to 4 week lag in housing starts from NAR. In other words, they normally won't release April's housing stats until the end of April. However, this weekly report gives us some insight about our housing market in April, so let me share that with you right now. So here's what I found to be most remarkable. Pending sales in the US continue to outpace new listings. What this basically means is that houses are selling at a faster pace than houses being listed for sale. For example, pending listings as of April 25th are up by 51% from 1 year ago. However, active listings are down by 41%. In other words, demand is far outpacing the supply of houses available for sale. All right, I have one more report to share with you, and it's a good one. This is from Realtor.com. It was just published today, so I told you I had a lot of information to share with you today. They reported April housing market stats, which at the time of this video, we still have 2 more days left in April, so I found that a little bit odd because the month is not even over. But in any case, they have some information here that I want to share with you today. So they say in April, newly listed houses, in other words, when a homeowner lists their houses for sale, those grew by almost 33% on a year-over-year basis compared to the onset of this pandemic last year. While it's promising that new listings have improved compared to the previous year, they are still down 25.5% from the typical rate of newly listed houses in 2017 to 2019. According to Realtor.com, the metros that had the biggest increase of new listings were Pittsburgh, Detroit, Buffalo, and New York. Houses in the US are also continuing to sell at lightning fast pace. So the typical home spent 43 days on the market this April, which is about 20 days less than last year. It also took about 18 days less than the typical time on the market in April 2017 to April 2019. Among the larger metro areas in the US, only New York saw days on the market actually increase, and it increased by 13 days. Okay, let's talk about home prices because I know you want to hear about that, right? So for whatever reason, Realtor.com only reports listing prices or asking prices and not sold prices. But because houses on average are selling for just over the asking price in the US, I feel there's some merit in sharing these numbers with you. So let me share that with you right now. The median home price for active listings in the US grew by 17.2% over last year and reached $375,000 in April, higher than last month's growth rate of 15.6%. The median list price of $375,000 is a new all-time high. And just a side note, this is quite a bit higher than March's median sales price of $329,000 that I reported just a few days ago. According to Realtor.com, Austin, Los Angeles, and Riverside posted the highest year-over-year median list price growth in April. Memphis, Milwaukee, and Louisville were the only top 50 metros to see their median list price decline on a year-over-year basis in April. If you enjoyed watching this video, then please hit the like button. I greatly appreciate that. And also consider subscribing if you haven't done so already. I post videos about how this pandemic is affecting our housing market. You also can follow me on Instagram. I'm Sacramento Realtor. Hope you have an awesome day and look forward to seeing you on the next video.